That's weak. That's down, down, down. So there's everything's weak. Here it is right here, man. Everything's weak. These are the bands. So they like right there. I would stay away. I would stay away. Wait. So this is called overselling, and this is called overbuying. What I would do is wait until this comes up, right?
Mm-hmm.
Okay. So this is called swing trade bot. Okay.
Okay.
I don't. Did you
Yeah,
get it?
it's in
I think
there.
I was over it.
No, it's
Oh,
okay.
sorry.
I got it.
Swing trade bot, and then I do trading view. So I would do right here like the VTI. That's a Vanguard Total Market. That's the S&P 500 basically. That's the one that I like.
And that's a EFT, right?
Yes, ETF.
Yes.
ETF.
Oh, ETF. I'm sorry.
So look, if you're gonna trade out, I like the 6 month view.
The
I
6
like
month
the
view.
6 month view. Look, basically this is what happens right here. Yeah. Every time the line crosses, this is the 10 and the 20-day EMA. Every time the line crosses up, buy. Okay?
Mm-hmm.
Whenever it crosses down, sell. Right there.
Mm-hmm.
Look. And then you let it loose, and then when it crosses up, you buy again. It almost crossed right there, but it didn't. So keep going. Right here, it crossed down. You sell right there, and then you wouldn't have got hurt.
God dang.
Does that make
awesome.
sense?
Yeah.
This
It's
is
a
free,
little
bro. This is
technique.
free. Yes, this is called the enhanced moving average. This is a 10-day moving and a 10 and a 20 moving day average. So what ends up happening, bro? They give you ads, but like, so what happens is, look, they cross, you go up. They cross down, you leave it alone. They cross up, you buy. They cross down, you go down. They cross up, you let it go, and then you let it go. And right there where they crossed, right there, that's when I sold. Boom.
All right.
So you just watch it. You just
Okay.
keep watching it. But here's the thing that you want to do. So look, like in Fidelity. Right now, I'm going long on some oil. I just bought some oil because I lost. Man, I was down at like I was up at $5,000.
Yeah,
I lost like $800. I lost, but I couldn't help it, man.
Yeah.
So I bought this oil, right?
Right.
So let's say you want to protect yourself. Let's say this oil, I don't want it. I bought in at $18 a share.
Yeah.
So what I would do, look, let's look at GSG right here. Let's look at GSG. So we're gonna go in. I'm gonna look at GSG.
Okay.
What does the trading bot say to do to GSG? They said, ooh, real strong. The long-term outlook looks good. The intermediate term, the short term looks down, but it's pretty bullish right here. So just they're basically telling you to chill. So this is what it looks like. It could go as low as 17 or as high as almost 19. This is where it's at right now at 1783. They're about to come down. Let's say they come down and they're gonna. I don't want it to go any lower than $17. Because look, if I go down in history, I think there's a line right here
Mm-hmm.
that up until about June, July, August, it hasn't gone down to below 1658. So here's what I'm gonna do. I don't want to lose any more than
Then 17.
1650, right?
1650.
Okay. So I'm gonna sell. I'm gonna sell all shares. Okay.
Uh-huh.
The order type is a stop loss, and I'm gonna put a stop loss at 1650,
Uh-huh.
and it's good till canceled.
Until the end of the day?
No, this is good till canceled. Gives me a year, like a six
Oh,
months.
wow.
6 months.
6 months.
Yeah, so 4 + 2, 6 months. So that means that if in the next 6 months this stock goes below 1650, it
Uh-huh.
automatically sells without me having to do anything.
Wow.
It's called a stop loss.
Beautiful.
I put stop losses on all my investments, right?
Right.
Right now it's at
Does the
1753.
Vanguard don't have that?
Yes,
right?
it does.
Oh,
Yeah,
really?
that's how mine all triggered. So I got out whenever it started going down.
Oh,
right
my
there
God.
where the lines crossed. That's where I got
You
out.
get notifications on you got that?
No.
You know,
It's just
you just
you
become
just put it in
study.
there, yeah.
Yeah.
And you always have to raise them. As the stock goes up, you raise it. Whenever the stock goes up, you raise it.
Oh, I see.
Yeah,
Now
'cause
you won't
you're
make no
chasing-
money.
It's called tightening up your stop losses. You tighten them up. Because you don't want to forget. Like, let's say right here, I put it at 1650. Then all of a sudden it goes up to $25, and I forget it, and I lose all of it. So once it goes up
Oh, I
to
see,
25,
I
I want
see.
to put my stop loss like at 20.
Okay, I got you.
see what I mean?
got yes.
So you
yes,
keep chasing your
keep
gains.
chasing the gains, and then and then you cut it off.
So look, so let's say you bought 10 shares at 250, right?
Mm-hmm.
So that basically gives you $2,500, right?
Yeah.
So then this sucker goes all the way up to 350. So you have 10 shares times 350. Now it's worth $3,500. So let's say it goes down to about 3,400 and you put a stop loss.
Okay.
Okay. Let's say it keeps going down and all of a sudden it goes down back to 250. Instead of spending 2,500, now you got $3,400 and you can buy that at 250. So now you got more buying power. Does that make sense?
Yeah, makes a lot of sense.
So now you got 3,400 and you can get back in position and you got an extra $1,000 of buying power. And now you follow that up again. And dude, it's
Keep
like,
repeating it.
look, man,
You know
look,
that.
look, it's a wave. You just got to follow the pattern. It's a wave. This is really easy. You just got to follow the pattern. Super easy, man. Like you can't get hurt if you follow that 10-day and 20-day moving average. I'll show you how to do it. It's super, super easy. These right here, man, are, I mean, there's nothing that can happen. Hold on a second, let me refresh this. There's nothing that can happen that's gonna get you hurt right here as long as you tighten up on your stop losses and all that good stuff, man.
Okay.
So, hold on a second. So what you want to do, for instance, let me get back in here. So what you want to do, like for instance, right here, let's say you're looking at Apple and you want to trade Apple. It's AAP, no APPL.
How about McDonald's?
Well,
McDonald's,
look.
they're always packed, dude.
Well, look at Apple. Look at Apple.
Okay. No.
So with Apple, for instance, James trades Apple. Why did it do my RSI here? Anyways, so there it goes. That's why. So with Apple, on the daily, let's go on the day. The day began this morning at 8:30 a.m. So right here, 8:30. Apple took a big jump, and then all of a sudden it lost. But look, every time, if you follow that, if you're a day trader, you would buy here, you'd sell here. You buy here, you sell here. So you're only getting gains. And every time it goes down, you leave it alone. And if it keeps going down, you don't buy. But right here, you get back in, you sell right there, right? Right here, this one, it looked like it was going to come up. It didn't. So, you're not going to
pull the trigger.
Yeah.
But if
sometimes
it's too
you don't.
close, you don't want to pull the
Right
trigger.
here, I wouldn't have. It crossed
Nothing.
right there, nothing, and you just stay out of it until the next day.
Now, is this happening as on real time? Is that where you?
So unless you're a trader, unless you have a license, you can't. But this is as close as you can. I think there's
how far is
just
it?
seconds delay.
Oh, really?
Yeah,
so
yeah.
it is.
Yeah. So
I mean,
as
as it's going on during the day, you can see it.
Yeah. This is
Okay.
This is like it's happening
During the
real
day,
time.
it's happening.
Yeah.
Will you be able to see it as it's happening? As in real time here? Does it refresh, or you just got to keep refreshing it so you can see?
No, it goes. There's a paid one right here that you can do.
Nah, I ain't gonna
but
pay nothing.
man, one day, man, just
I'm just gonna have to get in there and start, like the way you said, go in there and start getting used to reading it and knowing what I'm, know what I'm doing.
call me one day, man, and I'll run you through it. This
Well, I got video now, so
Okay.
I got video now and everything you said,
Yeah.
so I'm gonna go back in there and study it.
So it's Swing Trade Bot. This is like, let's say you want to buy, I don't know,
You know,
man,
the VTI.
McDonald's.
Oh, okay.
Look, let's say you want to buy
Yeah,
McDonald's.
McDonald's.
And this
Man, they're
tells
packed.
you.
Every McDonald's I go to, that jam packed, dude.
So right now it says, man, look, it's flat. It's flat.
It's not
Yeah.
going nowhere.
Just because you see what you see doesn't mean that you need
something's
to buy
happening.
it. So right now, it's pretty flat. That means that look,
It's not making or
you,
gaining.
No, if you
that
come
what it
out,
is?
look, there was a gain from here, but
Mhm.
now from that point on, look, it's flat.
Yeah.
that's called trending sideways. It's not going good or bad.
It's not making no money.
Yep. So
Gotcha.
man, this stuff.